Manish Sonthalia is our market master of the day. He's the head of equities, PMS at Motilal Oswal Asset Management Company. Manish, it's a pleasure. Great to have you back on the channel. Manish, how are you? How are you thinking about the market in terms of the move that we are seeing? It's been a very sharp move, which has gotten us to being flat for the year, maybe even slightly higher for the year now. What from here in the near to medium term in your assessment?
So Prashant, as we had been alluding that, most of the negatives pertaining to recession and inflation was getting priced in massively. And, we have seen a sharp pullback in the markets from recent lows, 15,200 or thereabouts. So I think it's just a build up on that, if you look around yourself, you're seeing commodities come off. Very recently, we also saw shipping rates come off. Rate hikes pertaining to US and even in India on 5th of August is broadly priced in. And the way, FII flows from being massively negative have started to turn positive. I think it makes sense for people to actually be more bullish going forward. Numbers have not really disappointed this quarter to the extent as was being anticipated. And I think things are only going to get better with cooling off of commodity prices and fears of rate hikes, sharp rate hikes going forward. That is starting to get built in, and I think the markets have more legs to go on the upside.
Some more legs to go on the upside. By the way, just pull out Zomato, it's just moved in the green. The point I was making as well, that because of the demand factor and the fact that the block deal took place at higher level and all 66 crore shares got absorbed. Manish, good morning. I think you have Zomato, right, in your fund. What's your call on the stock after this waterfall decline? At current levels, are you tempted to sort of add?
So I think the numbers were quite positively surprising. If you look at the contribution per order, that has now moved beyond 11 rupees. I mean, previous quarter it was 6.25 rupees. I mean, that's very positively surprising. They have managed to actually have break even on the EBITDA level as far as the food delivery business is concerned. And yesterday's call regarding profitability, timelines, I think they have guided for the fourth quarter of this fiscal year or at latest the second quarter of next financial year to be actually profitable at the EBITDA level on the entire company. From that point of view, I think things are going only marginally positive, and that is getting priced in. So I think we are positive on the stock, and incrementally I think things look better.
Incrementally things look better for Zomato. I wanted your thoughts, Manish, on the auto space, because stocks like M&M have been the biggest gainers this year, right? I mean, M&M as we speak is up 50% for the year. Is there still more upsides here, not just in M&M but other auto names as well?
Both autos and auto ancillaries are in a sweet spot given the demand in the system. We have seen Scorpio bookings. I mean, eye-popping booking numbers that we have seen. Yesterday we've seen Grand Vitara numbers in terms of booking. So, the latent demand in the system stays, waiting periods are getting elongated, supply side issues are getting resolved, commodity prices have come off, oil prices have come off their peak as well. I mean, all of these bode well for the auto and auto anchs. Plus, problems of power in the European region would mean there's better export opportunities also coming out of India. So all in all, I think, all the positives in the auto space are not yet priced in. There is some more room to go on the upside.
Manish, incrementally, what have you gotten more bullish on, or are in the process of getting more bullish on? Where you think there is more upside? Yeah.
So I think we like financials a good lot, and we are incrementally now turning more positive on IT as a whole. The negativities surrounding the slowdown in the second half is getting priced in. Margin pressures should alleviate going forward. Of course, there's some bit of probability, ascribed to this aspect as to the extent of recession in the United States. and the developed parts of the world. You know, that is one contrarian play that we want to be on the positive side on. Consumer discretionary as opposed to consumer staples, you know, because of the reflation trade or opening up trade, or, you know, the risk on trade getting priced in. And consumer discretionary would also include autos and, as a matter of fact, even industrials, because order books are quite good and execution is also shaping up well.
Okay, fair point. One of the big movers now is Bandhan Bank. Just pull out that intraday chart. That's moving now, high point of the morning. And a couple of mid-cap IT stocks are moving, Coforge and Mindtree. Manish, some of these tier 2 banks have seen some big moves. You know, it started with IndusInd Bank, but you know, you've seen, for example, IDFC First Bank, Yes Bank. A lot of these other stocks, they have moved up quite a bit. Any view on any of these names?
So we like AU Bank quite a bit. You know, even that bank has actually reported very strong numbers. We are in the process of evaluating even IndusInd Bank and IDFC Bank. Yes, the numbers have been pretty, you know, good, and valuations are pretty reasonable. So, you know, apart from the large cap financial banks, particularly the private ones, and even State Bank of India, which is yet to report numbers, some of these names do start to look interesting on the back of increased credit growth, and provisioning requirements, at least for the time being, seems to be subsiding. And that's a key monitorable as far as the restructuring book is concerned, as well as the MFI book is concerned. How that shapes up will actually, you know, determine the course of direction of these mid-cap banks.
Okay. Well, you know, that's on the banks. Any other spaces where you see some upside potential? Consumer discretionary has come back, consumption has come back in a big way, whether it's paints, you know, some of these companies like, say, Jubilant Foodworks, etc. Where do you see the maximum potential now from a 12 to 18 month standpoint?
So I think defense is one name which also looks quite interesting, given the order book built up position and the guidance which managements have been given. Some of these names have been doing quite well, but I think from a next 3 to 5 year perspective, this is also one space which looks quite interesting. One has to really take a call on the valuation aspect. Some of the names which you mentioned, you know, are really good companies. They have seen very good numbers. Even some of the numbers, you know, are coming at, some of these names are actually coming at very elevated valuations. So one needs to take a call, you know, as far as the valuation aspect is concerned on some of these companies. But otherwise, the entire environment seems to be good for a risk on trade. Apart from the regular sectors, I think defense is one sector which you could include as a part of industrials, is looking good from the next 2 to 3 years.
Manish, in terms of the valuation, earnings will come into focus, right? I think for Motilal, at least the sell side had about 1,000 rupees in earnings estimates for 24. Has that been brought lower? Is that number around there?
Let's deal with FY23 first, Prashant. You know, FY23 would see some cut in earnings on the back of some downgrade in earnings on Reliance and Tata Motors. You know, they were not good. So we are still working with 855 on the Nifty EPS for FY23 and around 1,000 for FY24. FY24 numbers are not yet tweaked down at all, but FY23 numbers, you know, have been brought down by 3 to 4%. We were previously at 865 plus, so currently we are at 855. Some more numbers are in the offing between now and 15th of August. So that's the number that we are working with.
So almost 20 and a half, 21 times, right? 23 earnings now.
Yeah, if 17,000 and 855, we are broadly at 21 times current year numbers on the Nifty. Not expensive at all.
Not, I would say, not cheap at all.
I think that's what Prashant was planning for.
Half empty, half full. the old.
You look at the glass half full or half empty, Prashant.
Go on.
You look at glass
Depends
half
on your
full or half
perspective,
empty,
right?
or you put some ice and soda in it. You gulp it.
Depends on your perspective, right?
Yeah.
But Manish, I guess that argument is stemming from the fact
Absolutely.
that there are some headwinds, right? I mean, we could be heading into a global recession. Inflation is still this overarching concern. Having said all of that, would you categorize this move as still a large bear market rally, or do you think we've sort of moved into the start of a bull market?
Sonia, I am very emphatic in saying that the worst of the recession fears or inflation fears are behind us. Neither are we going to see 13,000 on Nifty or 14,000 on Nifty or even 15,000 on the Nifty. It's not a bear market rally. It is a market which will look up quite substantially from where we are in the next 2 to 3 years. India is on the cusp of a golden decade before it. All the tailwinds are there before us. And I think this was a God-sent opportunity in the form of a severe correction that we saw. And I think it makes much more sense to be bullish than bearish. We are unlikely to see the previous lows in some time, for some time at least.
Okay, so in that case, Manish, what kind of equity returns do you expect over the next 3-year period?
I mean, ideally it should be 15% plus, building on 15% earnings growth and valuations not being very expensive. So anything more than 15% should be definitely an added bonus, but 15% is doable.
15% over next 3-year CAGR, that would be big.
Yes. Yes.
Okay, fair enough. So that's, I think, the most bullish voice that we've got in some time. Manish, thanks a lot for joining us. Always good talking to you.